Start, I think.
Got it.
There we go. All right, carry on with what you were saying there. You're on a good riff.
No, when on that Oxy purchase, that was the actual top of one of the last booms there, and then everything kind of went south or
Well, that's
sideways
right.
after that for a while. Everybody started selling Oxy, said, "Oh man, this is a bad deal," or whatever. And
I was one of the true believers. I liked Oxy before it was cool to like Oxy. If you go back in my stuff, I think I've got 16 articles on Oxy or 17.
oh, wow.
And I mean, when I say I liked them before it was cool, I liked them when they were going down. So I was a little early, but I liked them for the right reasons.
You said you liked them when they were going down?
Yeah, I would put out an article
as,
out
as
about
the
Oxy,
price
and
was going down, right? It was getting cheaper and cheaper.
it was getting cheaper
Well,
and cheaper. Yeah.
And then the other thing that Oxy did was that getting that deal about getting out of California there, and then they sold that CRC out there. They spun it off. That was another top, I guess.
Yeah.
And I lost a ton of money on that CRC business there.
Yeah, I lost some myself.
Yes.
You can't win every time.
Well, they say, "Oh yeah, there's no way in hell they'll ever go broke," Yeah, right.
Yeah, going back and looking at that, people just weren't paying attention to the debt. I mean,
Well,
Oxy.
but the CEO was always, such a good storyteller. He had everybody.
He had the gift of gab, didn't he?
Right. So he had everybody all believing. So it was always a religion stock or whatever.
Yeah, and then of course the market didn't help at all. I mean, when CRC went out of business, the market was just tanking.
That, and then the politicians out there basically put a
that's true too.
Back, with the passing a bunch of stupid little laws there. It says, "Oh, you're not going to be able to, dig more oil or whatever out here.
Yeah,
no oil here." And
what do you think of the sell-off this week?
Well, some people, I didn't think that the oil and natural gas was going to get hit as bad as regular general market.
Yeah.
But apparently it sounds like a lot of people had to, well, there's two kinds of investors, I guess. The ones that sell first and ask questions later, when things start south a little bit, there's a lot of these guys that have their sell stops, made from real tight, and so they get stopped out. But then there's people that had to sell whatever they could, that still, to find money to meet margin calls.
That's why I don't buy on margin, man.
Right.
I don't have the money, I don't buy it.
Yeah, and then some funds probably had to sell just to cover their losses, at their margin calls or whatever.
Yeah.
But there was a lot of stuff on Friday, especially on the Canadian names, that were down like 11%. It was almost like, red lights or flashing red light, well, not flashing red lights, flashing yellow lights that say, "Hey, come buy me."
Yeah.
Because it's almost kind of hard to sit there and say, "Yeah, well," and the thing is, if you wait too long, as soon as you miss it, right there and then, the thing will turn around and go back up or whatever.
Or, the inverse is also true. If you take the plunge, then they'll go farther down.
Right. There's a couple of names that I did buy that actually did close higher. And so I was able to establish a couple new names. One of them was Paramount Resources, which is kind of a weird name. It was selling at 27 US, and it was up as high as 31 here a few days ago. So I was down considerably, and but they're kind of like a mini mutual fund, because they own a lot of other names within that company, and I think they bought a big chunk of the Apache Canada when they wanted to get the heck out of Dodge and out of Canada, and so they had to digest that big purchase, and so they go around and they sell little pieces. They'll go out and prove out a few sections or whatever, few areas, and then they'll make it look good, and then they'll.
Where's their focus?
It's all out there on mostly it's natural gas. On
But are they up in the Clearwater or?
No, they're further west out there, almost on near Alberta. I mean, on the Alberta, western Alberta and northeast British Columbia, BC.
Okay.
But I think they're mostly, I haven't looked at their presentation here lately, but most of their land, they've had it for a while, because the old man, Riddell, he's been around for a long time. He actually died like four or 5 years ago. It seems, I can't remember now. So his son is running it now, one of his sons, and then his daughter is married to Mike Rose, the CEO of Tourmaline Oil, which is a natural gas outfit, one of the biggest. And she runs a couple. She runs a couple outfits on her own. One is called the heck it's called now? I just had it on the tip of my mouth. The other
That
one
name rings a bell.
like the Riddell family. Yeah.
Yeah.
They're pretty famous there in Calgary. But anyhow, so that one there, and now they're paying a pretty good dividend too. I haven't even looked at their dividend. Let me
Is
see.
it Paramount?
Paramount, yeah. So let me see if I can even find that real quick here. What they're paying for a dividend. POU. Let's see here. POU. Paramount Resources. It was down. Well, it closed down 617 on the Canadian side, but. Well, they're paying monthly, and it's almost 3%.
That's not bad.
A lot of these were a lot
3%
higher.
a month?
Monthly, yeah, 2.963%.
That 36%
that's
a
yearly.
year?
No, that's
okay.
2.96 yearly, but they pay on a monthly basis. So they pay 10
okay.
cents,
All right.
10 cents Canadian.
Yeah.
So that's like 0.7879 cents a month.
Yeah.
I bought 100 shares just to get my feet in.
What do you posted the link in the chat section of the Daily Drilling Report about a Zoom call you were pretty excited about? I haven't had a chance to look at that.
Yeah, you can watch the video.
The White Tundra?
Yeah, White Tundra. He did one today, and I don't know why. He said he advertised it for 2 p.m. Eastern time, and he started like 45 minutes early. No, these guys, they'll jump on Twitter, say, hey, we're starting in 15 minutes, so he pushed it up to like an hour, it seemed like. But he had one Saturday too on now I even forgot what the heck the subject was on Saturday. Let me see here. I gotta push that up again. But that was the one on Saturday was pretty good. Let me see, different that Zoom call today at 2 p.m. and the intro to North American oil market. So that was pretty interesting.
I know you follow a couple of gurus. Shubham Garg, am I saying that name right?
That's him. That's the guy.
Shubham Garg, and then the 9 Point guy.
Right, Eric Nuttall.
Eric. What are those guys saying about the sell? Have they put off any commentary about that?
Yeah, Eric Nuttall, he's a fund manager, so he's not going to tell you exactly to the minute what he's doing, to protect himself, and he's always selling when you think he's buying, and vice versa. But I doubt if he sold ahead of time. He's got money coming in all the time, so whenever he sees any dips, he just keeps buying more.
I get you.
No, he said that all this was just all temporary. As a matter of fact, he put out a thing on Twitter.
Well, that's kind of what I was getting around to, what the essence of that was.
Right. So let me see if I can find it here on Twitter, what he said Friday, because, yeah, basically, this whole thing is just, let me see, June 18th, Grand Prix to, so, says here, don't try to make, this is on the June 17th, says, don't try to make sense of it because I can't. The recessionary fears, seldom winners, need for liquidity, who knows? What keeps me sane? At an oil price $10 lower than spot, my average holding is trading at 1.9 EV to cash flow and 34% free cash flow yield, and we're going to get
30% cash flow yield. Is that what you said?
34%.
34%. Wow.
Free cash flow yield. Yeah, because a lot of these names, they're going to be all basically all done with their debt by the end of this year or middle of next year. And these guys have like another 12, 15, some 30 years worth of production that you're getting for free.
Well, exactly. So you haven't really heard anything that degrades my thesis that we're structurally short of crude, from in terms of inventory shortage, production, on a global basis. And let's remember that the crude is a globally traded commodity, and
Right.
What happens in one place has an impact on other places. Those are the two things that I'm kind of hanging my hat on. As long, and in addition, this has been a knee-jerk reaction to what I'm calling the Fed put. We all knew it was coming. We didn't know exactly when. And then now that it's here, oh my God, the house is on fire. But people still need oil. And there's not copious supplies of it.
Well, and a lot of this oil growth is going to come from emerging market countries, like India and some of these Africa and some of these Southeast Asia countries where people want to, they're getting out of poverty levels. And they're, buying a scooter or motorcycle for the first time, or they're buying a car for the first time. The funny thing is, I have friends, like, for example, in Europe, this guy in Finland, he's big on Bitcoins, but that's a different story. So he's not, he thinks, oh yeah, we're not going to need oil in 5 years because out here in Finland, everybody's driving EV cars, and they, because the government subsidizes the crap out of it.
Were there like 2 million people in Finland or something?
Well, it's not that many. But the thing is, though, he doesn't think about where he's going to get the power from on the EV cars, as far as the electricity. Still going to need natural gas because, if they don't have nuclear power, it's going to be pretty hard for them to.
That's right.
But so the Europeans, they might decrease the use of ICE cars a little bit, but even there, they're going to run into problems with the metals that are needed to make the batteries. So unless they improve these batteries and make them where they don't need some of these hard to find metals.
This European saga is about a year old now. It was about this time last year, we started hearing little glimmers and rumors about, hey, Europe might be in for a tough time. They're having a lull. The wind isn't blowing.
Right.
The sun isn't shining and all this stuff. And what it reminds me of is just, they had this story they told themselves, and they didn't do any sort of investigation on, well, how do we really bring this about? Can we produce the materials? Will they work as described? In fluids in the oil field, we have what we call a pilot test, where we take 350 milliliters of something and mix it up. And if it turns into a snafu, then we've got half a cup full as opposed to 500 barrels. Of it. And nobody really did any due diligence. And the weird thing is we're emulating them. We're trying to do the same silly stuff that they did over there 4 or 5 years ago, only we're doing it here at a faster pace. It's
Right, right. Well, and the thing is, though, you know, especially like you take a country like Germany, where they're basically shutting down all their nuclear power plants, and they're going to switch over all to wind and solar.
yeah,
Without even knowing whether it's going to work or not, and they think that's going to
right,
be, you know, in 5 years or whatever, and it's going to be a lot longer than 5 years to
right.
switch over.
And if we were
They have-
making Cracker Jacks, it wouldn't matter. You know,
Right.
the world can get by on a shortage of Cracker Jacks, but this is energy security, and everybody, another notion that I have is we've all just accepted here in America anyway, cheap power and very reliable power. I mean, Al, you and I've had it all our lives. We've never really known what it's like to flip a switch and not have anything happen.
Right.
Other countries are not exactly in the same boat, but we took it for granted. And then these, for want of a better term, you call them green speakers. You know, they put out this fantasy, but we voted them into power to where they could actually try and do it. And you don't have to probe, the leadership in this country very deep before you find they have no clue. They have absolutely no fundamental basis for any of the decisions they're making or actions that they're implementing.
Yeah, well, especially because a lot of these politicians, they never had a real job in the real economy, in the
Well, that's a
private
fact.
sector, so they don't know what the hell they're talking about. A
Yeah,
lot of this is being pushed by the WEF, the World Economic Forum, and
right.
Klaus Schwab and Larry Fink of BlackRock, and just about all the banks in the U.S., the big banks, and the big mutual funds in the U.S., Vanguard, and all these people that are
Yeah,
pushing all this ESG stuff and all this green energy stuff, and it's all a ripoff. And but they're getting money from the government and all these subsidies, and so they're milking it for all it's worth. But the thing is, though, apparently a lot of these funds, they're not even performing. They're losing money.
well, they're not. They're not. In fact, I put up some examples of ESG funds.
Right.
They're down 25-30%. This is before the big sell-off. I haven't checked any of them in the last week or so.
Right.
But where the oil funds, the OSX and the XLE and some others were up, well, nearly double in a lot of cases.
Right.
And then you take some individual stocks that we follow, like Devon and Oxy and some others. Since the first of the year, they're up over. In the case of Devon, they're up 130%. Again, until the little meltdown that we had here. But I don't know. I'm a pretty good salesman. I've had a lot of sales training out. It was a big part of my job in the oil field most of my career, and I can sell pretty much anything to anybody, but I don't know how I would go about selling an ESG fund, except to somebody who was just so committed to this climate narrative that they didn't care if they made money or not. Yeah. Which,
right. And a lot of it is just all for politically correct reasons. It's not that it makes any sense or not. Although a lot of people are waking up to it, all this, it's basically a hoax.
It is, yeah.
Ponzi scheme. But a lot of these fund managers, they're probably going to start losing their jobs here pretty soon, because if they don't perform, they're going to be out the door, and so a lot of them are buying some of these oil companies now as, like if there were like closet indexers, and buying them just to cover their butt. I mean, especially in Canada, you got white cap resources, for example, got a lot of this ESG crap in there indirectly, because they do this carbon capture stuff.
Right.
Or they say, well, if these fund managers are going to have to go buy an oil company, they'll go buy them first. because they can say it's green.
Right.
No,
Yeah,
without being green, but,
they're mitigating their carbon.
right, they're
footprint,
making
all that kind of
excuses for
thing.
buying it because they're
Yeah.
doing something for the carbon capture. So
Yeah.
there's a few of those, and there are even some now in Canada that are kind of hybrid between being an oil and gas company, doing a little bit of renewable energy too.
Right.
One of them is a new one that's not even available in the U.S. Yet. Ticker symbol is not available in the U.S. But so some of them, and some of them are doing. There's a couple smaller outfits that have real old legacy wells that they bought for super cheap, almost like the old MLPs here in the US, that they would buy the wells that they were basically almost dried up or whatever, and these bigger corporations would just sell them off.
Right.
Because they were almost at the end of their life. But now with the oil price as high as it is, they're back to where now they can, with new technology, now with horizontal fracking and all that, they can go in there and make some good money. Where before with just vertical drilling and these some of these wells are like 60 years old. So they've been doing, pumping, 5 barrels a day or whatever, but when the oil was down 35, 40 bucks a barrel, it wasn't even economical to even run. But now,
what you find with companies that go back into these older wells with the advent of modern technology is that they were not properly produced, and they watered out and left a lot of oil behind. Once you start producing water, you're not going to make any more oil.
Right.
And so they can go back and probably do a sidetrack with the technology, the seismic interpretation and imaging, where they can actually look under the ground these days and see the reservoir. So they can do a re-drill using the main wellbore and do it for a fraction of the cost. And if you don't produce it well properly, you may have left 90% of the oil. So it can be pretty lucrative.
Yeah, and on some of these vertical wells, they may have not gone deep enough, or they may have gone too deep and sidestep or missed some levels, up higher that they weren't economical back then, when it was $3 a barrel, whatever. Now they, if you go in there and do horizontal fracking, then they would, be okay to run with. And the same thing with natural gas, apparently, because there's some of these older wells that are still producing and just barely going. But then there's different levels, like up there in western, the Canadian Western Sedimentary place there. It's they have a lot more levels further down, lower levels than even the Permian. Permian has a whole bunch of different.
Oh yeah, the Permian is the ultimate stacked play.
Right.
When I first started digging into Devon, that was the thing that struck home. That you've got probably 7 or 8 different horizons, and of course, as I've made the point repeatedly in my articles, you have to look at the thickness of the formation where you're located, and in some places you've got thousands of feet, other places you don't have just a few hundred feet.
Right.
But it makes a difference in what you ultimately recover from the well. What are you looking ahead for this coming week?
Before we go to that,
okay.
Just remember, last week, or was it last week we did the last time?
Well, it was the week before last week.
Oh,
skip the week.
It's been 2. See, time flies, huh?
It does, yeah.
I can't believe how fast time goes. But anyhow, that one company I was thinking about in Oklahoma there on the scoop stack play there that I couldn't remember the name was Gas Star, GST, went broke. And what happened to them was that they were starting to get a lot of gas with their oil. So it just wasn't profitable, I guess, especially with natural gas at cheap levels that we had 4 or 5 years ago. So, eventually they ended up going broke. They had way too much debt and just couldn't swing it. But anyhow, as far as looking ahead for next week, well, we'll see what the EIA or the API numbers show for next week and see how that goes. I think that we're probably due for a little bounce. We could have a little bit of a dead cat bounce, and then maybe some more people will sell off as some prices recover a little bit.
Right.
But I think for the long term, for the next 6 months or a year, everybody was expecting a kind of a sell-off in May.
Yeah.
This showed up in June.
Showed up in June.
And then this whole business about selling oil names because we may have a recession coming up here in the United States. I know they're going to have a recession in Europe, but here in the United States, even when we had basically the country shut down for COVID back in March of 2020, we only dropped less than 10%, I think around 9% of production. So we only, went from 100 million barrels a day to 91 million barrels a day or whatever.
Right. The demand side of the equation is just too strong. I'll be looking for the API report. Just confuses me. It seems so inconsistent. At least the EIA, tracks it in multiple reports, so you can kind of synthesize, the weekly report with a monthly report and get some idea of the trend. We booked a gain in the DPR last month. The WPSR also we showed a small gain in that. This should be a time when the refineries start, taking crude and making gasoline for the driving season. So I'm looking for a draw.
There's a lot there too. As far as making gasoline, we're making refineries here in the United States probably making way more gasoline than we need, and a lot of it is being shipped to South America, Mexico, even Europe maybe. And so now even some of these politicians gonna come out and say, oh, you can't export any gasoline or refined products.
The worst thing that can happen, government intervention in a market is always, most of them have never had real jobs. To think that they know something about how a market functions.
Right,
I mean,
right.
Biden proves every day, every time he opens his mouth, that he hasn't the foggiest idea.
No, and this Ron Wyden from Oregon, he came out with this bright idea of jacking up, putting an excise tax on oil companies from 21% to 42% if they make over 10% profit, whatever the heck that profit
whatever
is.
that is.
Yeah, right.
Right.
And, so that's gonna be even worse because
I'll tell you what, if anything like that grows legs and walks, you're gonna see drilling fall off a cliff.
Right. And that's gonna make
it will not be. They will get. It'd be like putting your hand on a burner. They're going to get an instantaneous feedback that, ooh, this is probably the wrong thing to do.
But as far as the API number, that comes out from the industry. So it's a private sector number. So you don't know where they're playing with the numbers a little bit there in order to kind of not show their hands too much. But then on the EIA number, since that is run by the government, we know that they're just putting in funny numbers to begin with, and then it doesn't correct for like, for 2 months. So
Right.
if you look at the numbers from 2 months ago, then they true up. But the numbers that we get from last week, they're just as phony as, they just put any number there.
Yeah, but at least you
Well,
can
yes.
get a trend, that's
Right.
that's
But,
to me the value of that.
But the EIA number from say 2 months ago, that kind of is accurate, but not
Right.
last week.
Right,
Or
exactly.
being true. So, but anyhow, yeah, one can plot the line, the dots, and see
Well,
the way it's going.
it'll be a shortened week, so we won't be getting those reports till Wednesday and Thursday
Oh
respectively.
yeah, it's going to
We
be
have a
delayed.
federal holiday coming up here.
Yeah, tomorrow, which is another joke.
Exactly.
That's,
Hey, before we bug out, did you have a chance to look at my article on Devin maybe taking over Marathon?
I haven't had a chance to read it
Hadn't
yet.
had a chance.
I get a run.
I got pretty enthused by that. I actually got the idea from something else that I read. So I started doing comparison between acreage that one company had and how, well, acreage that Devon had and how the acreage that Marathon had would fit into it to come up with a thesis. And in the Delaware, these stack play, and up in the Bakken, I mean, those two companies would fit together like a glove. Now, down in the Eagle Ford, Marathon has acreage in the southern part of the trend. Devon has it up in the northern section of the trend. But the trend is so flaky is, Marathon might actually have pretty good acreage. The best part of the trend is in the northeastern section of the Eagle Ford trend. The southwest, it starts to get a little more lenticular and thins out. But anyway, so I'm going to go back and kind of finish that thought process and take a deep look. We initially only looked at the Delaware comparison, but go into the scoop stack and the Bakken, and then do a workup on Marathon. I was pretty impressed when I started looking through Marathon financials. That I even before I got too far in the article, I went into the market and picked up a couple hundred shares just to.
Marathon has actually gone up quite a bit in the last year. They've doubled in share price.
Well, you go back to December, January, it's $10 a share.
Right.
So it actually tripled before the sell-off.
Right.
So we'll just have to see. Al, we'll probably go ahead and leave it there. They're getting ready to cut us off here. Good.
Already?
Yeah, we only get a little over a half an hour here.
Oh, I thought it was like 22 minutes. It says the remaining 4 minutes. Anyhow,
Yeah.
what I was going to say real quick then on
Yeah.
the Marathon, on the Eagle Ford, Baytex Energy works with, has working interest in a lot of these Marathon wells.
Right.
So that might affect them. They bought right at the top in 2014, right before the market crashed. And
when I first started following Baytex Energy, they were like $1.50 a share or something like that.
oh yeah, they've come up nicely.
They're around $5 now, aren't they?
Yeah, over $5, and
Over 5.
and they're gonna have a lot of their debt all paid off here pretty soon. So that's gonna be so on your. I wonder anybody there in the Eagle Ford if they're doing any 3-mile horizontals down into Mexico.
I think it would be tough down into Mexico.
Yeah, right. I mean, because right there at the border, if the Eagle Ford goes right to the river, right?
Right.
So
Yeah.
You think that there would be the same stuff over there on the Mexico side.
I don't know. The Mexicans might object to that.
But
they
wouldn't know if it was 3
they
miles
sure gave
underground.
Talos Energy a hard time about sucking away their oil offshore.
Yeah, that's even offshore.
Oh, yeah.
All right, well,
know.
good deal. So that was quick and fast.
Okay, good to
All
chat, Al. I'll send you a link to this and I'll save it as public so we don't have that snafu.
Okay, great. Sounds good.
Talk to you later. Have
All
a good
right,
one, buddy.
have a nice weekend. See you
All right, bye now.
Tuesday. Thanks.
Yeah.
Thanks.